Hello, and welcome to this episode of the Penny Lane Podcast with Real Simple ARIEL. You may remember him from the S Trading interview. He is amazing. His story is so inspiring, and I know him fairly well because we've traded together a little bit. So I love the flow of this episode. I love all the knowledge he dropped, and I can't wait for you to listen to it. Also, if you have not gotten your Penny Lane merch, make sure you visit our store. We've gotten great feedback. Let's get into it. Ariel, hi. Welcome to the Penny Lane Podcast. How are you?
I'm doing well. Thanks for having me.
Sure. We're so lucky to have you. Now, our viewers have probably know you a little bit because you were on the S Trading episode that just came out. So
Yeah.
welcome back. And I'm so excited that we can just focus fully on you now.
Yeah,
Hear
I love
all your strategies.
I appreciate it.
Also, I do want to say that a lot of people on the podcast I haven't met until the podcast. So I just did want to give like a disclaimer that you and I already know each other.
Yeah.
We've already traded together and we've talked a lot about trading. So there is some like familiarity there, just so everybody knows.
Yep.
So the reason I wanted to have you on is because your story is so interesting to me and so different from a lot of people's. Would you mind just walking us through that?
Yeah. So I guess I'll just kind of go to the beginning. So back in, I guess as a little bit of background, prior to last year, April, I literally had no knowledge of the stock market. I didn't really know what market orders were. I didn't know what limit orders were. I didn't know what VWAP was. I mean, nothing. All I know is it was a place for, I just thought, investors to put money in a company that they liked, with like a time horizon of years, right? And then hopefully turn a profit. What I didn't know was small caps. What I didn't know was, 1,000% runners. I didn't know any of that. And last year, I guess for some people who are familiar with my story a little bit, I got actually sentenced to 18 months in prison back in 2018 for weed-related charges. And I got home in April of 2020. Now, at this time, like our market had just gone through this COVID correction. And so in April, when I got home, some of my friends were on Robinhood and they're all turning a profit and they're all doing well. And I was just like, okay, well, what's going on here? You guys are all making money. I could try to make some money. What's going on? So I didn't really know anything about the market, but I started Googling, places for traders, right? Trading ideas. And I found StockTwits. And StockTwits is actually where I ended up meeting my mentor, Cam the Man. And I know yours, Brad, knows him pretty well. And Cam was like throwing out overnight ideas. And I came back the next day and saw that his idea crushed it and had a little checkbox next to every idea. And he was just like, everybody's making money in 2020. So long story short, I ended up funding my account April 14th of 2020, like 2 weeks literally after I got home. I spent 10 hours a day for 6-7 weeks just studying my butt off, right? And I wasn't very good. And it took, another 90 days on top of that to finally start turning a little bit of profit. And, it was just how do I say it? We were in the right market for like a new trader to show up, right? And it's allowed a lot of us to still stick around because of last year's market and even the market we had this year. So, yeah, that was a blessing. And I ended up basically taking a small account, 14,000. I finished with like 90,000 in profits last year, which again, for a brand new trader, somebody in my circumstance who had essentially just walked out of prison, it was like a complete 180 to life. I found something I really enjoyed doing, something that I felt like I was good at. And maybe the market, had a little something to do with, the cockiness, feeling that maybe you were better than you really were. And then, 2021 started the madness, GME, AMC, cost, TCAT, DLPN. I mean, sympathy plays were high. I made a huge majority of my money. Whenever GME was going, I would just start hammering the buy button and costs. And whenever TCAT was going, I'd start hammering the buy button at DLPN. And whenever LEDs was going, I'd be playing Mosey, right? And the beauty was we had so much liquidity in our market that you could play big size, and some of these setups, they weren't so much about technical setups at all. They were psychological setups, right? As much as crazy as that might sound, but it's like knowing something's going to move because something else is going to move. Because people are like, wow, GME just ripped, $20, $15. Like cost has to move $1, right? And I was taking advantage of that. So yeah, before I got kicked from TD Ameritrade, I essentially went from a $100,000 starting portfolio this year to 3.3 million, and then they gave me the old boot. So yeah.
Walk me through that conversation.
Yeah.
Was it a voice? Did someone call you on the phone?
No, they sent me an email. They sent me an email, and then they sent me a letter just stating, business purposes. We're gonna have to close you down, and you're limited to, or liquidating transactions only, no new transaction, like no new opening positions. And I know why they did it.
Tell me.
They're liquidity providers, right? Like they do provide midpoint fills. They provide liquidity. So when I buy something on the market, the price between the bid and the ask, they fill me, right? They don't give me the price on the ask. They provide liquidity for the price in the middle, right? So when I was playing names like Cost and it had 24-cent spreads, they're not filling me up on the ask, 24 cents away from the bid. They're filling me on the market like 10 or 12 cents from the bid, but right in the middle. But the idea is I knew that some of these names were going to move. And so you could do this with a lot of, brokerages that provide liquidity, which again, you don't want to do it. You'll piss them off. I mean, I did. A lot of other traders have, and a lot of other traders have been booted. But yeah, if you take too large of positions and then you soak up the liquidity that they provide, then the stock price goes up. Because if I just want to move the stock price up, what do? You just buy the ask, right? I just buy the ask. You place an order to sell, I buy. But if the level 2 isn't very thick and there's only 20,000 shares available on the ask, but I want 50,000, I'm not going to get my 50,000, but I want 50,000. So you market by them, right? I want my full fill. And then, as the price starts to go up into your favor, and a bidder is now over your price, I don't just want to sell to the bidder and not the price down. And I'm not, you're not going to get 50,000 cells worth of sells off on the ask. So you would market sell out. Again, they provide you that liquidity. So basically what ends up happening is if you're an extremely profitable trader using market orders, you're essentially absorbing and taking liquidity away from them, and they hate it. You're just absorbing too much liquidity and they have to provide it for you. Where, like, for instance, with Trade Zero, and this is where I've actually gotten much more focused on trading names that are highly liquid. Sympathy plays haven't necessarily been working, and sympathy plays haven't been working because of liquidity issues. I can't just go buy 30,000 shares of cost. I will probably halt that thin POS right now, right? And so, yeah, so I've been much more focused on where's the liquidity, where can I play with my portfolio? Because, again, I also want to move the needle, and I can't go play Mosey behind LEDs anymore. Why? Because LEDs isn't giving multi-dollar moves anymore. It's giving, 30-cent pops. And then I look at the volume bar and it's on 18,000 shares. And you're just like, okay, so that's like one person participating maybe. And then I'm supposed to go play Mosey for like a 4-cent move on 6,000 shares. Like, so we wouldn't be moving the portfolio. So I don't even waste the mind power for it. I'm looking for bigger percent moves. And if there's going to be less liquidity, you're going to need a bigger percent move if you want to make money. So you're not going to get a huge percent move on a 1-minute candlestick. You're going to get it on an hourly candlestick, on a daily candlestick, so you have to sit for a whole lot longer. But you don't just want to like haphazardly buy any stock. You want to find the ones that are holding up, and then that's where, scanning for the names that you want to play. Uh, and again, when I first started trading, I love trade ideas, right? And things that are hitting the scanner, things that may be washing out, things that are setting up, things that are up on highest relative volume. But now, so much of my work, believe it or not, is done when the market is closed. And then I'll scan the market on things that held up the best, things that have the nicest hourly and daily setups. And then I'll create a watch list for the next morning. And then I'll, more so now than before, I had a friend, he's like a wizard on TD, but, he really helped me out setting, just simple alerts, because there's 50, charts that could be setting up, but you don't have 50 charts up. So you got to have some alerts. And, he just essentially made my life a little bit easier by showing me a couple little tricks. But, that a lot of my work now, yeah, it's done when the market is closed, and it just shows me where I might want to be in the next morning. And if I'm not necessarily watching those names, because my gap list might be awesome the next morning, and that's where my focus is, because that's where a lot of volume is appearing it's going to be. But I at least still have my alert set. If something starts to move, I'll get a little message, hey, and then I'll at least be able to focus on that chart. So yeah, setting alerts. And a lot of my work, like I said, is done after hours now. It just makes life so much easier for the next day. I mean, and we see traders like SD on Twitter, and he does an awesome job putting together a watch list, and like giving you a good bounce zone, and where you could scalp it to, what might be a better long-term hold. And he does that when the market's closed, right? When the charts are no longer moving. And that's, honestly, when some of the very best work is done. So, and even if like you're looking at the overall market and it was pulling back a little today towards the end of the day, when you start to look through charts, you're going to start to like find charts that held up towards the end of the day that are now setting up that much nicer, for tomorrow. And for instance, if the market starts to bounce, but then these names held up the night before when the market was pulling back, well, what do you think they're going to be doing the following morning if the market gives that bounce? Well, they may be breaking out, right? So that's part of the reason why I find it, important for me to kind of be prepared the night before now. So
are you still, is Cam still your mentor?
yeah, oh, absolutely. I mean, he I'll always give him credit for essentially him opening my eyes to what was possible in the market. And then his really close friend Jordan, I mean, he was another guy who, when I found Cam, there was days he was doing 30 grand a day, 20 grand a day, 50 grand a day, and you're just like, yeah, right, like I'm not going to be able to do that anytime soon, like that's not possible. But then here was his friend on the other hand, and he was doing 500 bucks, 800 bucks, 1200 bucks, 700 bucks, but like crazy consistent. And I was like, well, that's more doable. Like 800 bucks a day would be life changing, but that seems more doable. And I just started showing up to his weekly recaps, just started like listening to things he was putting down. And then, like, Cam would always say, buy the dip, buy the dip, buy the dip. And I used to have the silliest little strategy. So I would play like the 9 or the 10 EMA on my chart. And I used to use the active trader ladder on Thinkorswim. And I would just like hover on the 9 or the 10 EMA, and I would see the price that it was. And like when a stock was kind of going sideways or uptrending, I would place an order on the active trader ladder at the 9 or the 10 EMA. And the stock would sometimes just come in, boom, fill your order, and then bounce right off. And I would take my 50, 60 bucks off the table. And I used to do that over and over and over and over and over. And that was my strategy. And it was like, can I make 50 bucks a day 20 times a day? And can I be wrong, 5 times a day where it just costs me, 300? And then that was the idea, walk 5, 6, 700 bucks. And, your strategy will evolve as your portfolio grows, as your knowledge grows, as your risk tolerance grows, like all these things kind of change. But yeah, I used to have the simplest strategy, and that was just place an order on the active trader ladder right at the 9 or the 10 EMA and catch a bounce. And that was it. And so many times I used to like place that order, get filled, And then the thing would just like, I would sell like that little bounce, but then the next 1, 2, 3, 4 minute candlesticks, the thing's just ripping. And you were like, what the hell? Why is this going without me? But then you looked at the chart and you would be like, oh, it was a perfect hourly setup. It was a perfect 5 minute wedge. It was a perfect, Tesla's going right now, and you were playing Fisker. Like, you just bought the last candle before it ripped. Yeah, your strategy got you paid, right? But little did you know that was that's the dip before the rip, as some people would say. And I didn't know that until you just missed the trade so many times. You're like, I'm so tired of missing these trades. And so, yeah, as you get better, as you miss those trades, as you take money off too soon, you know, you start to understand how these things set up, how they move, why they move. Again, it could have been as simple as Tesla's flying today, Fisker's moving behind it, and again, that was a way that I made money as a sympathy, or sometimes it's literally a picture perfect wedge that ends up breaking out on whatever time frame you're staring at.
So, how did you get from 14,000 to 25,000?
Yeah, so Cam last year, right around the time I got home, on his Discord, he gave out. He has like this little channel on the left hand side there, and one of them was like elite swing trades, and I didn't know shit about the market. Right? It was just like, you find a company, you buy something that you think is going to be useful, or has some benefit, and you invest and you just sit there, right? And all the while, I don't know how to trade, so that was my mentality. So I ended up funding my account, and Cam, this kid who I've now seen hit nail so many overnight ideas, he gives out an elite swing trade on MARK, which I don't know if you remember, Mark. They had like this thermal technology, and I was just like, okay, it's going in hotels, airports. I was like, this is going to help so much shit open up really fast. And I thought was going to be some massive technology. So I didn't really realize how much risk I was putting my money in by investing into such a POS, at like $1, $1.10. But I actually sold like MARK even $1 too soon. I ended up owning Mark at like $1.11, and sold somewhere at like 260, and it ended up going to like 320 or 330 that like very first run, if my memory serves me right. But Cam the Man gave this out on his Discord as an elite swing trade, like down at 50 cents. Now, even when I saw it, I was just still like, this news is huge. This could blow them up. And by the way, everything in the stock market back in March, April, second week of April, May, was giving massive moves. So, something being up from like 50 cents to like $1.11 when I got in, I didn't necessarily feel it. By the way, I didn't really know risk management for shit. So, it being up 100% wasn't like something that fazed me. I was just still like, okay, this is a dollar stock, who knows? But yeah, I just knew their technology, and I knew I always thought that that's how you played in the market. You invested in the market, until I learned that, trading in the market was a thing, and this 2020 taught me all about sympathy plays, because GNUS happened. GNUS was like my first introduction to that. But yeah, MARK. That's my baby. Without that one, I don't really get my day trading jump in the stock market.
Sure.
Do I learn to swing trade a little bit better? Do I maybe mirror trade Cam the Man a little bit more in 2020 on some overnight ideas? Yeah, and if you followed him at all last year, you know that he was on fire, and plus our market was on fire last year. So
Right.
if you bought anything in 2020, you probably almost got out of PDT. So that was the whole idea. And again, a lot of traders, myself included, uh, we got lucky in a way to get the bubble market that we had. Like, if you really had your shit together, and we had our last year's market, that's how we get guys like, Christian Kulamagi, who I've told you about. That's how you make 50, 60 million bucks in a year. you know um, But when you participate for a decade, your level of understanding is something else. But for new traders, I mean, a lot of us got very lucky and blessed, and I know that now we continue to do this every single day because it's something that calls our attention. Not only that, like the stock market's been completely gamified. The stock market is a complete video game now. Where
Sure.
people,
Yeah.
if you were a gamer and you're used to sitting on a chair behind a screen, this is no different. It's just like, do you understand a little bit of sentiment, market like pattern recognition, and you know, but other than that, it's been gamified completely.
So, question.
Yes.
You get out of prison.
Yep.
And then you say to your parents and loved ones, like, great news.
Yeah.
I'm a trader now. And were they like, see how this goes? Like,
so I ended up doing well on MARK. And remember, like, I didn't have some job to get back to, I didn't have like some career to fall back on. So they were just like, okay, well, you've made now. When I started full time, it was June 1st. I mean, I won't forget the day. And at this point, I was up like already $15,000 since being home. So it's like, okay, 2 months, you're already up 15 grand. Like, all right, son, whatever. Like, they weren't really. My mom wasn't really taking me seriously. And all of June, all of July, and then even going into like that first week of August, I had actually done nothing but lose money. Like, I was literally slowly trickling back profits and like barely staying over PDT. So much so that like when I actually had trades that got me under PDT, I mean, I ended up selling my motorcycle. I sold my Daytona chronograph Rolex watch that I had just to like have some money in the bank and also keep my account over 25,000. So I actually, in a way, I ended up like giving back a lot of those gains that I made in MARK, but just kind of kept funding myself to keep myself learning and trading.
yeah.
And then like it was like right when August hit, I remember SPAQ, which
Oh, God. Don't we all?
became Fisker. That was actually one of my better trades. I've been like following them, and like
Whoa.
I
Wait. You're like the only person I know who had a good
yeah, I actually, because
SPAQ experience.
I literally said to myself, like, I feel like they're being hammered down for no real reason, and I'll wait for them to change to FSR. And the essentially right when they changed to FSR, I won't forget the day, but like some analyst gave like a price target upgrade, or somebody said like in some news article like they can double from these levels, and I won't forget it. They were like $11 that day, and I just bought the hell out of them. And all they did was go up, 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 up all day long. The next day, like a few weeks later, they were double. I didn't hold for the doubling because, of course, I was a day trader, just insanely impatient. But yeah, like Fisker SPAC was what turned out to be one of my better ones, one of my better trades.
Well,
and what a pain in the ass
impressive.
that one was. Yeah, what a pain in the ass that one was. Because
Now,
I got beat down on it going down a little bit, but I was like, okay, when is this thing changing from SPAQ to like Fisker? Like, when is this happening? And then it happened in October, and yeah, that one like really started to set me up for the remainder of the year. So.
did you play CCIB?
No, I didn't.
I
didn't
had
at
such
all.
a good time with CCIB. I loved CCIB.
I actually stopped playing a lot of the SPAC names, a lot of them. So, I saw kind of what happened to Nikola. I saw what happened to HYLN. I saw what happened to SPAC and FSR. A lot of these SPACs had awesome front side moves, but when that backside came, it was like is super vicious. And again, and at the time I wasn't like into holding things for multi-day. Like, we were having such a hot year for sympathy plays last year, that literally was my biggest focus. It felt like free money. And even still to this day, it can be free money. I mean, Netflix was flying the other day, and I was making money on Roku. I mean, uh, you know, there wouldn't have been a time when I could play $300 stocks like that, but it's cool that I can do it now and make a bunch of dollars per share. It's much easier. Large caps too. It's like a slow transition to large caps. The stocks are way more linear. You're like actually trading a company that's very unlikely to drop an offering midday. you know.
I had such a bad day today that I was playing WWR in after hours, which I should not. I just freaking know better. And they dropped 2 PRs in after hour, and I was like, literally any second they're going to drop an offering. Like, what am I doing?
Yeah.
Yeah, I just got
I try to
real
stay
desperate.
away. I try to stay away from any after hours or pre market. Part of the reason is you just can't take the size. When I first started trading, I used to get to my computer. I'm Central Time, so I used to get to my screens at like 5:30 in the morning. Why? Because last year, we used to wake up and things were up 80, 90, 120, 200% in the morning. You were just like, what? I remember we'd wake up and we'd have 3 names up 100% pre-market.
Yeah,
Big volume.
yeah,
Now it's like, and I remember,
30.
I remember Brad, your mentor, going, "Yeah, we're just not. I mean, I'm not even going to post the scans until we get like a 100% mover on the gap list."
Yeah,
And
yeah. And then he got a lot of shit for that, but I mean,
no, for what?
I'm
It's
for
like,
it.
look, it just depends what kind of trader you are, right? Like, if that's the kind of market you really want to participate in it. But like, I'll say this, like 3 months ago, 2 months ago, it hasn't been a fun trading. Like like fun trading, like ended for me in like May this year, and
April.
yeah, April. So it's like it's been difficult. I it has not been peaches and cream. I mean, I'm struggling. It's not 100K days every single day. So, and again, look, it's a good thing to be able to struggle and participate. Like struggling doesn't necessarily mean you have to be red, but they're not bright green days like a lot of people have grown accustomed to, and that's okay. Like, at the end of the day, it's all FU money anyway. And even for like the people who it isn't that, like, it's not that, like, it might not be that for you yet, but like
Sure.
there's gonna
Never has been.
no, but like there's gonna come a time, when you're gonna be doing $500 a day, and that is an insane blessing. Like, I sometimes got to just slow down, put things into that perspective, and say, we're because otherwise, you just, even for myself, and I'm such a new trader, I couldn't imagine 5 years down the road if I continue to have similar success, because all I do is try to, like we were talking about with Esk, it's like, you know, the callus on the skin's totally fine, but at like what point do you draw the line? Like, do you have to have a 7-figure loser to say like you finally made it? Like, does your portfolio have to get so big that you can just like lose 1 million? Because then it just becomes like an endless cycle of trying to size up instead of just like, you know, understanding that, you're blessed, we're lucky we get to do what we do, try to trade the best setups, leave the rest of the shit for anybody else who wants to headache themselves and enjoy life. Because in reality, like, the certain structures in the market that occur over and over and over and over and over, and once you understand what those are, just trade those and leave the rest. And if you get stopped out, the losses are small. But if you understand, like, and Mark Minervini talks about it all the time, you don't become a United States trading champion because you're not good at your job. It's like, learn what a really nice, healthy bullish wedge looks like, on a nice hourly time frame, or learn what he calls a volatility contraction point, or like I tell you, wait for a nice 5-minute setup where the initial move was up, then it pulls back, finds support on rising EMAs or SMAs, the range tightens up, and then, it starts to break out for that second leg. You've got a clear area to risk off of, you've got clear momentum to the upside. Like, but everybody wants to try to catch the dip. Everybody wants to try to have the lowest average, and that's all guesswork. And it's like, we don't ever know where the tops are too. I tell you this too. So what do? Scale a little into strength and let the rest ride on an EMA. You never know where tops are. You don't know where bottoms are, but focus on your job. If you're a trader, your job as a trader is twofold. It's to find where money's going and to find where money's leaving. All right. Once you know those two things, the rest is irrelevant. Like the rest is just noise. Like when you see that money's going somewhere, you get in and make trend your friend, but again, we are so, and like myself, I'm so impatient and I'm so used to instant gratification. When you traded sympathies, you got to sit there for longer. These percentage moves take a little while to, the move takes a little while to finish out. And but like with sympathy plays, you used to be able to hammer on massive size and get instant gratification because you were instantly green, instantly big green, and you would just be able to exit your position. But now if it's a nice sideways consolidation after it made a nice strong move up, gosh, it's like, look back at the AEHR chart. It doesn't lie. And if I bought it on Thursday, the breakout over 1420. And if you buy that breakout and you flip to the hourly, you're still sitting in AEHR 3 days later. And again, guys like Christian or guys like Pradeep or guys like Mark Minervini will tell you stocks like to move in 3 to 5 day momentum bursts. And you'd be taking some off yesterday or I'm sorry, on Friday or today. And then the rest you would just be trailing on an EMA, and who knows, AEHR can go to 30 and your entry could have been 14. A completely stress-free trader, looking at SDC and how strong SDC was for a few days. You could have entered SDC off of a really nice setup a few days ago and just hung out in it all day long. Nobody was talking about it. No kill candles. No, right? Like that's the thing. And like the more people talk about it, like DATS, well, DATS gives more kill candles than any chart I've seen.
I mean, you want to do that today? You know how much money I lost on DATS today.
Yeah. So it's like the more
rub that in my face.
Yeah, the more retail is on the thing too. Like, I like market orders. They're easiest. Limit orders are great, but market orders obviously are the simplest, right? And most people will use market orders. But then that's the problem. When you get too retail heavy, right, and a lot of people start market exiting, you get really bad kill candles. So
wait, I didn't know that most people used market orders.
Not a lot. A lot of people will use limit orders, but for instance, when you get TD Ameritrade for the first time, there isn't a join the bid, sell the ask, sell the bid, sell, like those aren't there. It's just buy the market, sell the market, which is so like that is and why do you think that is? Well, one, your order flow is sold, and that's a whole another discussion for another day. But yeah, it's like they don't want you to get the very best price or the price that you want. That's why you use a limit order. And by the way, a lot of people do use limit orders, but it also depends on liquidity. If you're not going to get your fill and you want your shares, what choice do you have but to market order? But the danger in a market order is you don't know where they're going to place you, right? That's the danger in a market order. You can get a fill close to the ask. You can get lucky and get a fill close to the bid. You can get something in the middle. But a lot of people do, contrary to popular belief, a lot of people are just market ordering. They're not selling on the bid or selling the bid or hoping to get filled on the ask. A lot of people, when they want to get out, they just market sell.
Huh.
You wait to get filled on the ask? Like you placed yourself up there and tried to get filled on the ask?
Yeah, always.
I mean, God bless you if you get filled every time.
Well, some of us don't have the same size as you. So,
Well, no, I mean yeah, exactly. If you've got smaller size and you want to get out, but if you're wanting to get out, or again wanting to get in, if I want 50,000 shares of a $3 stock, right, and I place my order at 301, what's everybody going to do when they see an order at 301 for 50,000 shares? They're all going to jump ahead of me. I mean, for the you know what I'm saying? And again, that goes for me too. Like if I see a huge order to buy and it's a real order and it's not like some fake wall that, like, you know, as it's going to approaching that price, he's like disappearing, and but if he's like a real order that he's trying to like get filled, and he's like, he might want 100 or 200,000 shares, I'll just front run him. I mean, I'll just take 50,000 shares in front of the guy, because now I'll have gotten filled. I still know he wants 200,000 shares. And as we start to go up, you know, I know he's still there. And I got in 1 penny above the guy that still wants massive size. I could still sell my entire position at a 1 penny loss. So no big deal. So if I see a fat order on the bid, I front run him. If it's a stock that I'm watching and I know it's a real bid, right? So So yeah, that's the thing. If I place a big order on the bid and I want my shares and I just get front run and I want 50,000 shares, now all of a sudden I got 8,000 shares. I mean, it's like I'm trying to make money, right? And so yeah, playing super liquid names is great. Like when AMC went on like that insane run from 30 to 70, yeah, if you had a $20 million account, you were able to get filled 50,000 share blocks of AMC like butter. You know, when it's trading 2-3 million shares a minute, you know, at $35. Like not a lot of people, you know, can afford 50,000 shares at $35, but yet you were able to get filled like limit orders like butter. You know, but you can't get filled 50,000 shares on AMC right now on a limit order. Like not that easily, not that quickly, not in a blink of an eye. And
so just let me ask a stupid question. I really try not to ask stupid questions on here because I want people to think I'm smart.
No questions.
But if I'm getting filled on my limit orders, give me some reason to switch to market. Like
you don't want it. You don't want it. If you don't trade big size, and by the way, I don't recommend market orders even with big size, because slippage ends up getting you. Like I would rather.
Tell me what that means, because Brad always talks about slippage, and I don't know what that means.
So Brad also probably trades a bigger account as well, and
sure.
So like slippage is like if I've got 20,000 shares at or even call it 100,000 shares at like $5.50, and I go to get out of my 100,000 shares. If I'm up 40 cents on my trade, I'm up 40 grand. By the time I sell my 100,000, I'll have actually knocked that stock price down 15 cents. But half of my position may have been sold like as close to 550 as possible. I could have gotten a few 550s, some 548s, some 547s, some 546s, all the way down to like 538. So like I knocked the stock price down 12 cents getting out of my 100,000 shares. So like my entry, call it, was a 510 average. We're up at 550. I was up 40 grand on the position, but by the time I sold the entire thing, I only ended up with a $31,000 winner. So I caught 9 grand in slippage. So it's like I was up 40 grand when I started selling. By the time I was done selling, you know, I was only up 31,000 overall on the trade.
So obviously the same thing can happen on the opposite end. If you're getting stopped out or something and you have a massive amount, you could.
Oh yeah. So then the slippage exactly. Wait, on the downside. I wonder if that's if I place my stop at 5, and a lot of people are like, yeah, psychological 5, you know, if it goes below 5, you know, we're all dumping it. If that becomes like the herd mentality and I'm in at 510, and then everybody starts dumping at 5 and I start dumping at 5, well, we're knocking this thing all the way down to 485 and I'm in at 510. So like, you know, it was 5 when we all started selling, but by the time I got all of my sell orders done, my average sell could have been like 487, and I caught another 13K in slippage. And again, that's also the danger of size, of market orders. If again something was going up and I had 100,000 shares to sell and it was at like that 540 or 550 and I'm up 40 grand on the trade, if I know that there's enough liquidity and this thing's trading 1 million shares a minute, 2 million shares a minute, I can place, I can join the ask and, or what I do is I set some hotkeys. So I just front run the ask by like 2 cents. So
Uh-huh.
I'll just like place 2,000 share orders, 2 cents lower than the ask. And sometimes like if it's a really tight spread, I'll just essentially be selling to the bid at that point, which is fine. Same thing. But I'll be trying to take some off at the very top. But if the name's got a hefty spread and you market sell, yeah, market maker could sell you close to the bid. So that's why I try to stick to something that's super liquid. Because yeah, slippage, big size, it's just not a fun combination, honestly. Anybody who's ever played with big size will tell you that exact same thing. You could be up 40, 50 grand on a trade, and next thing you know, you're selling it for like 35 grand. It's like, damn, where'd that 15 grand go? So, it starts to add up. Like it could become like a mental thing for some people, that money starts to add up, but it's part of trading with big size. You can't just exit on the limit, or again, you can, if you know how to execute hidden orders, I don't, that's for again, that's a whole nother story. You can hide orders. You can hide orders on level 2.
I've heard of this, but you're so far over my head. I
Yeah,
can't
you can
like
hide
it's
orders. So essentially, like I can tell that there are orders hidden. Like if I buy the ask, like I want to knock down a wall, for instance. Like I see a wall, call it's $1, right? And there's resistance at $1, and there's this big old wall at 1, and I just start clicking buy the ask, buy the ask, buy the ask, like 2,000 shares at a time or something. And when I notice that the level 2 number isn't moving, but my prints are going through on the tape, well, I know that there's just a hidden order that still wants his shares to be bought into before that wall at 1. Does that make sense? Before like the actual, so it's just a hidden order there. And you can see them all the time. Like, there are times like you could tell if the price wants to go down and like the bid side on level 2 isn't super thick, but the price isn't dropping even though the tape is moving. So like, you'll see buy orders going through, you'll see prints going through on the tape, but the price can't really go any lower, but the bid's not super thick on level 2. There's a hidden buyer there. So again, these are all things you see. You may not be able to see them using TD Ameritrade because their quotes are a tiny bit slower. So that's why I use Dash Trader. The level 2s have always
but
been.
also you got kicked out of TD Ameritrade. Let's
Yeah, no, but a lot of traders who do use the level 2s with TD Ameritrade, they know, and they're just slower. They're delayed
I was
quotes.
I was just joking.
No, I know you were. I know you're teasing.
Okay. I want to ask you what I'm doing wrong with this current strategy I'm using, which we sort of is similar to the one you were talking about. So basically, if I can find a chart that is whole, I use the 9, you use the 10, agree to disagree, but it's holding the 9, everything, the EMAs are in order. It's like a very tradable play. I will buy, just continually add every time it touches the 9, and then sell like into strength or when it goes up. And then I always have my stop below the 20. But I've been like screwing myself recently by doing that. Like I will just add 100 or 200 shares every time it hits the 9. But then I'll make my average too high.
Yeah.
And
So
so
are
I
you
will
taking any of those
pay.
off, or are you just adding?
No, I'm selling and adding. But so that's a lot of different trades on one trade. But so I will make, like, let's say I make $1,000 on this trade. And then by the time it's all said and done and it like breaks below the 20, then maybe I've made 5 or 600. So I think what I'm doing wrong is not taking a bigger size in the beginning and just keep averaging up. What do you have any advice for that? Because I don't really like to take a huge size. I like want it to confirm that it's a real play before I, because usually I will buy up to it being about 1,000 shares
Yeah.
when I mean, and I guess that's sort of embarrassing. Like, I know a lot of people play with a lot more than that, but that's a lot for me right
No, I
now.
started with 1,000. And believe it or not, I was always told by my mentor, scale in, right? And that's because we don't ever know exactly where the bottom on something might be, right? But like we were talking about on one of your recent episodes with Ask, it's like I also want to get in as close to the place where I would exit, right? Or I want to get in as close to the spot where I expect there to be demand, right? And so I am looking for a chart that is, and one of my biggest focuses lately is a bigger time frame. So there are a lot of times when if you do catch a breakout, the price actually moves very quickly away from your average. So because of the larger time frame breakouts that I have been playing, again, part of it is like understanding what kind of setup you're getting yourself into, right? Is this a washout mean reversion, or is this a 5 minute consolidation, buying the dips off of the 20, off of the 10, seeing it get tight, averaging yourself in, and then playing for a breakout, selling some a little bit through highs. And then again, you don't ever really know where the top is on something. So what I've been doing lately is just I leave it on the 5 minute, and I'll say if you after I've sold half of my position, call it right through the highs, whether it be intraday highs or pre-market highs, I'll flip it on the 5 minute. You could use the 9 or the 10, but my rule is very simple. With this other half and the other remaining of my shares, I will trail it on that 10 EMA on the 5 minute chart. And there's a lot of times when you can end up catching, I mean, massive moves. For instance, if you were in Prague today, you could have caught a move from $1.60 to essentially $2, which is a big move. But then you saw the
So I
consolidation again,
played
and it did it again. So it's like these stocks just do the same thing over and over. They go up, they go sideways, they get tight. They're you get what they call like the volatility contracts, right? And like I don't want to. If you want to scalp something that is up and down with a big range, great. That's what we want as day traders. We want big range. We want volatility, right? But leading stocks, strong stocks, stocks that will continue to go higher, move exactly like they have for hundreds of years. They go up. They essentially go sideways while their volatility contracts. It's like
which is the steps on the
yeah,
stairs.
it like the stairs is essentially that volatility contracts. So like the range gets narrower and narrower and narrower and narrower. And by the way, as a day trader, that's not the shit you want to be in. That's just sideways, a mess. And by the way, when that range gets tighter and tighter and tighter and tighter and tighter, unless like you notice that and you recognize that, and then you're slowly piecing yourself into all those tiny red candles with like small size. But and when you do that, as that range gets tighter and tighter, and you realize that this thing's just getting tighter potentially for that second leg, as you buy all those little dips and you average up, the like your average still stays below that price, which is a good feeling, right? Like because you're
Yeah.
taking all those dips and then the stock perks back up and pulls back down, and when it gives you a higher low, if you're averaging into those higher lows properly, your average stays below that average price, right? And not only
And
that,
I think I'm doing that wrong because I'm not,
well, yeah, don't buy into the green candle. When you buy into the green candles, you bring your average up too much. You want to buy into the red candles, and you want to continue to see higher lows. And by the way, this is all on the smaller time frame. Like you'll see this exact same thing on a larger time frame if you were looking at the hourly and the daily. The hourly and the daily will show you something very similar, but then your patience has to be different. Now we're swing trading in a way, but the charts will set up very similar. They'll make a move up, like, again, look at AEHR on the daily, not like the last 10 days, but go back like a month and a half, 2 months ago, 3 months ago. It made a huge move up. Throw your 10 and your 20 on there. It can't pull back. It found support on the rising 10 and the 20. The volatility contracted, then it broke out, had an expansion candle over the 10 EMA, and it's been above that essentially since $6, right? And
What does
charts
rising 10 and 20 mean? What is the
like,
rising 10 and
because a stock initially shows strength, right? Like when a chart consolidates, like look at the large caps like AFRM, UPST, ASAN. When a chart consolidates, all the EMAs or SMAs will get very tight. Then when a chart has a range expansion day, right? Those EMAs that were all really tight, as the chart breaks out, those EMAs all start to what? They're all rising. But when a
Got it.
stock pulls back, you want it to find support on those rising EMAs.
Got it.
Does that
Got
make
it.
sense? So it's like it's
Yeah.
the same shit. The 1, the 5, the 15-minute. You like whatever time frame that you enjoy and that you love so much. This is talking to any trader. Find the time frame that you like, right? You want to find stocks that have shown strength. You want to find stocks that have pulled back, find support on those rising EMAs, has that volatility contraction, which Mark Minervini talks about so beautifully. And then you play the range expansion, right? And a lot of times, like sometimes these range expansions could be like Pradeep calls them episodic pivots because maybe they have blowout earnings. And then, they end up making moves like UPST and going from 160. I don't know if it was blowout earnings or what UPST did, but when something goes from 160 to 1 or 300 and change, and look at the daily, it didn't close below the 10 for like a month straight. Go back and study BNGO when it broke over 50 something cents and got over the 10 EMA on the daily. When that happened, it spent like 35 days above the 10 EMA on the daily. It's like you don't have to exit these positions, but it's, again, you don't know where the top and the bottom of these things are. So what you have to define what kind of trader you are. I love day trading, but I also love intraday swinging because the percentages can be bigger and things that set up really beautifully. Like the most volatility and the most volume that comes in is almost always in the morning, right?
Right.
So if something sets up overnight, like, which is why, scanning for what names you might want to be in the next morning, like scanning for them tonight, seeing what held up best, seeing what went sideways the best on the hourly, and then having that plan for the next morning. Because when they break out, and if they start breaking out in the morning, I might never. Okay, I'm kicking myself because I'm not still sitting full size in PRO, even half. I'm not even half size in PROG. I kid you not. I could even send it to you after this, Blaine. I had a 139 average on PROG. Okay, on the breakout this morning, 139. I mean, I essentially had the very bottom on this thing. So you look at that chart, and you don't have to exit these things on the hourly. So intraday swinging, even easier. Even more stress free, less button clicking. More life enjoying, and that's really the kind of setups that I'd prefer to be trading. And again, study PALT, Grom, Prague, AEHR. Look at these hourly setups. They all essentially have set up the exact same way. They made a move up, they pulled back, they found support on those rising EMAs, it got tight, and it kept going. And all of them had the exact same recipe. I don't make it up. Like, I don't make the rule. I just, see what works and follow that. Because it really does. It's not right. I mean, I wish it was so much hard. I was telling this other trader from another Discord that I mentioned, she's another talented trader. And like, I went over this exact thing on voice with them. And like, we were looking at tons of charts, tons of examples. And I was just like, I don't like buying. Like, if I'm looking at the minute, right, I don't want to buy it when the 10 is under the 20, under VWAP, no, it's like, if all those EMAs are nicely clean, stacked on top of each other, now I'm looking for dips against those because those are all ascending, and it's not a tangled mess of a chart. It's at least shown enough strength that it can, right the ship on those EMAs and, give me an appearance of a bullish chart. But something where like the 10 and the 20 and the 50 and the 100 and the 200, if they're all sloping down, and then on the daily it's beaten up and it's sloping down, and the hourly it's beaten up and it's sloping down. What are you trying to catch the bottom on something and prove a point? It's like, there's no sense. That's like too much headache. I got so far away from that because I got burned so many times on like trying to buy the dip, that we don't need to buy the dip anymore. Charts will set up like they have for hundreds of years. If they want to be strong and show you that they want to go up, like even VYGR yesterday, peep at VYGR. Look at that hourly.
Oh, I overnighted that from Friday.
Yeah.
Sold it for a loss this morning. It was so fun.
As they say, classic. But again, but if you look at the hourly before the breakout yesterday.
Oh, look at Prague. It's 8 o'clock now. Well, it's 7:58. Got a very nice low close on Prague.
What do you know? Somebody broke through that wall.
Nice. Well, now I'm not red on it anymore, so it's not, good for me.
No, yeah, this is good stuff. No, and I mean, look, could this be an overnight idea? Look at how tight the 10 and the 20 EMA got on that 5-minute chart. But the 10 never crossed below the 10 EMA never crossed below the 20. The chart never closed below the 20. Like, look at how strong that chart ended up looking.
Yep.
It refused to close below the 20 on the 5-minute. Refused to close below the 20 EMA on the 5-minute. Imagine that.
Huh.
Weird, huh? I mean, it's like you can't make this shit up.
You're catching me on such a frustrating day. I'm going to just take your word for it.
And I mean, that's what is Pet V is also going? What a turd. But yeah, I mean, it's really just the wanting to keep trading as simple as possible. I don't need to have the best average. I just want to have that confirmation that a chart is strong. And for me, has it recently shown strength? Has it found support on, rising EMAs or SMAs or whatever it is that people like using? Does it start to build higher lows? And does that range start to contract? And for a lot of traders, it's the simplest wedge. I mean, don't overcomplicate the trading, and a lot of times, like, charts that want to go higher, it looks so blatantly obvious. It looks so. Are you still?
Sounds so simple when you say it.
But you know why? Because a lot of times I'm okay just sitting on my hands now. Because at the end of the day, I'm a sympathy. Like, I have done the best on trading sympathy plays. So I remember another trader and that I got to meet in Reno, Willie, Meat Sauce, right?
Yeah.
Yep. Super cool guy. And he's once said it on Twitter, and I was like, I wanted to say, like, man, amen. And he's a sympathy, play trader as well. And he was like frustrated with the market, and he goes, I'm not just going to try to reinvent how I trade. Like, I trade a certain way, and the way I trade's not working. And, I'm not going to try to reinvent. And that's the truth. It's like, that is how I've done the best. Right. And I'll forever, like, if I see NVIDIA flying, I'm going to hammer AMD. Right. Like, I'll forever be comfortable doing that. But it's like, if that's not a viable, working every day, can put good money in the pocket, then, studying, what other good setups and how other things move in the market. Like, again, I've even said it, like, if the SPY is out there tanking, I'm going long on UVXY. And, like, to some people, like, that doesn't make a lot of sense. Or of, like, the SPY's up and running. Like, I would want to be shorting, UVXY. It's like, people don't even, that's like a whole nother So there's like always always a place to make money in the market. You just got to know where you want to look. And I got over wanting to catch, names that like need to bounce. Like I've been hearing people talk about TMC needing to bounce since forever, or I remember when BTX went all the way to $80 and then was at 40 and then 30 and then 20 and then, oh, it needs to bounce. Well, tell Kathy Wood that skills needs to bounce. It's like sometimes shit just doesn't bounce. And if somebody would have told Kathy Wood or one of her advisors how to look at charts, they'd have told her to exit a long time ago when it broke below the 10 on the daily. They'd have told her, Kathy, money's leaving this son of a, we got to get the hell out of here. And really, it's like, that's it. It's like, keep it really simple. If your job is very simple, we identify where money is going, where money's leaving. And until you feel like you have a good grasp on that, why try to push anything? And that's exactly why, I want to show you certain scans so that like at least your eyeballs are in the right place, right? Like we are looking at things that are holding up. Like, and if the SPY's coming down and these are holding up, even better. I like you even more, right? That's relative strength while the market's pulling back really hard and, whatever still holding up.
Ooh, I have a question about relative strength.
Yeah.
So I also sort of struggle with like relative volume because I sometimes, even if the volume isn't in the like close to the millions, I'm like, well, this volume is a lot more than this stock usually has. Where is that threshold between relative volume and like just volume and why?
I like to see at least 3 times, like at the very least. I mean, I would prefer more, but like 3x is like, I mean, because it depends, like its normal day volume. Like if Palantir is trading its normal day volume, that's plenty. If it's trading 3x, its relative volume, that's a ton. But then you've got like names, that are like might only trade 600 or 1 million shares a day. Like if their RVol isn't 20x or better, like I won't even consider it. Like, or 10x. Like you might have to trade 10 million shares in the day because like sometimes you go to like their days prior and like they trade like 400,000 shares, 600,000 shares, 1 million shares in the day. And you're just like, if it's going to have a 3x relative volume day, like even it only trading 4 million shares on the day, 5 million, it's like not enough, right? Like I really would only, if I'm going to day trade and scalp, like if scalping's what you want to do, yeah, I'd like to see, I don't know, 30 million shares of volume, 40 million shares of volume. But the days prior could, they might only trade 1 million shares of volume daily. So the RVol then would be 30. And then, hey, that might have your interest, especially if it's a low floater, but if it's like 100 million share float and it's trading 30 million shares on the day, I mean, that's going to suck too. I mean, so again, there's also that fine line, it's like how big is a float compared to how big the big a volume it might be trading. Cause if the float's too big, like it takes, heaven and earth to move OCGN. Why? Because the float's humongous. But if it traded 2 million shares a minute, well, we're going to move the damn thing wherever, the market dictates it's going to end up being, but if it's trading a constant 2 million shares a minute, it's going to be moving nice. But if it's trading this 30,000 shares a minute, I mean, there's no sense in wasting your brain power with OCGN for the 8 cents it's going to give you,
Mm-hmm.
So yeah, there's a little something to be said about a float being too big. But that's why CEI moves so well. Even though that float was kind of big, when you're trading 1 billion plus shares a day, anything can move.
Were you trading CEI?
I did, but I actually sold way too soon. I had 100 or 300,000 shares at like $1.30, and I cut it like push over $1.50. So yeah, in terms of like the dollar amount, sure, it was cool. But then it kept going all the way to almost $5 without me. So watching it move like like $3 or $4 from my entry was like a little sick, knowing that you had like 300,000 shares on it.
Sure. Sure.
But that it's happened to me so many times. I had 60,000 shares of AMC at, like 221, and I ended up scalping it same day, like for like a I don't know, like a 15-cent winner. Imagine that. Only for 7 days later it to be at 20 something bucks.
Yep. Yep.
That was
Well, I guess we're sort of getting to our hour here, even though I could talk to you for like 5 more hours. So many questions. I hope that you'll come back. You've already been on twice, so I assume you're coming back.
Oh, I'll be back. I'll be back. I mean, even if it's just to run these scans, run through these scans.
Well, thank you so much for coming on the podcast. I feel like this has been a long time coming, and I really enjoyed this episode. I learned a lot, got a lot of clarity on some stuff. Maybe one day I'll be a good trader.
No, you're gonna end up being great, and we're as soon as we get done with these going over these scanners, you're gonna feel a whole lot better going into tomorrow, and I think going into next week after you've like set them up, I know you're gonna feel very comfortable. So it's just tough, right? It's like when your eyes aren't in the right place, it's tough. Like trading's so much easier when you're trading the right names, honestly, and
Sure.
that's like something that I've just started learning, because again, the majority of my money has been strictly sympathy plays. So I mean, there was a day when I literally did 50K on Mosey off of LEDS, and I did like 60K on DLPN and 70K on cost, all in the same day on 3 giant sympathy plays. And again, same goes for like EEIQ and WAFU. They were so much more liquid a few months ago. Like they would move dollars, right? But now it's like they give you, I mean, today they actually give a pretty good pop, but they're not nearly as liquid. You can't take the same kind of size. They don't have the same kind of range. So the money's not the same. But now when your eyes are in the right place, we're going to make your life a whole lot easier going into the rest of the week. So you'll have the right scans.
All right. Well, looking forward to it. And thank you so much. And thanks for coming on the pod.
Absolutely. Thank you for having me.
Is there anything I didn't ask you? Anyone you want to shout out? Anything?
Honestly, I feel like I gave a couple of traders their shout. Honestly, it was so nice getting to meet a bunch of the guys that I met out there in Reno. They know who they are. They're all really good people. But also, I got to give a little shout out to my guy People Wish. He's pretty much the man behind these scans. He actually got to trade with me Thursday, Friday, and today. So this little setup that you see behind me, he was here for the last 3 days. But he's an incredibly brilliant mind, and he made my life easier. So I'm making sure I pass along the love to make everybody else's life a little easier.
Cool.
Too.
I really want to do a Penny Lane Pod meetup.
Oh, that would be sweet.
We don't have the same size as some other podcasts that can do meetups, but I've got it on my vision board. I really want to do it probably in Vegas because I love Vegas.
I love Vegas.
Place,
yeah.
So,
the better spot in Nevada.
I am really.
It's a tease. It's a tease. Dan and Hugh are they're great hosts, and they had a great event, and I wish those guys nothing but tons of success. And obviously and you as well. And you guys got your podcast, and I know the FinTwit community gives you guys plenty of love, and there is no. I mean, I wouldn't try to make it a competition. You got your own thing going on, and you got it. You got it going on great here. So
Oh, of course not. And like, I give Dan and Hugh props almost every episode. Like,
Yeah. And I mean,
without
they
them,
got
there'd
it
be
going
no
on.
me.
Yeah, and I mean,
So
they literally were pavers for people who kind of wanted to go into, opening up your podcast to talk about something that like so many young people have caught an interest in,
for
right?
sure.
And I love it because it's like what has fueled some of my growth, right? It's like there are so many great traders out there that like are putting out free content. It's like learn from that. Like there's
For
so
sure.
much. This is like there's never been a better information era than we're in right now. So like soak it in. I mean, I really had no understanding of the market at all just 16 months ago. And I put my pants on just like everybody else. The thing is I sit in front of screens all day long. So if that's what you're willing to do, then you really can get good at this. I mean, you don't have to be some savant in math or some, wizard at anything to get good at trading. You just have to have a little bit of understanding for market sentiment. You have to have a little bit of patience with yourself as you learn, right? Be in no hurry to make money and find something that fits you, your edge, right? And, for me, that's always sympathy plays. And that's going to be bullish consolidations, right? Like finding a chart that showed strength and is now taking a little breath and is gearing up for round two, right? Like that's what I look for. I look for stocks looking for round two. And yeah, that's we're trying to keep it really simple. And
Cool.
maybe in 20 years we'll be doing something a whole lot crazier.
Sure. In 20 years, we can have a Penny Lane pod meet up and like,
In Switzerland.
sure. Yeah, I'd say like Hawaii, but I hate Hawaii, so that's not gonna work.
What?
Yeah, it's not my favorite place. I
Why?
also
What happened? How bad did you get burnt there the last time you went?
I've been to Hawaii a lot of times, and it's a long, long plane ride, and
Yeah.
every time I get there, I'm like, it's cool, but like it's not like I really like the Abacos. I think that's like such a cool, special, off the beaten path spot. Like Hawaii, you go and you're sort of meant to marvel at it, and I like a little less.
Yeah. Yeah,
No.
we go to Italy every now and again. My family has a home out there, so that
Stop.
yeah, they have a
Stop.
yeah.
Italy's my favorite place in the world.
My stepfather's Italian, and he was born out there. So yeah, he's had a home in this little town.
Where?
It's this little town called Scauri, Scauri. It's about an hour south of Rome, maybe 90 minutes, and then 90 minutes ish north of Naples on the West Mediterranean side.
I did my study abroad in Venice.
Oh, very nice. Yeah, okay.
Italy is like, I love it more than anywhere in the world.
Yeah, it's beautiful.
Yeah.
Like Rome is like unreal. So you've been in the Colosseum. Yeah. So it's beautiful. The Fountain of Trevi, the Spanish Steps. Yeah. So me and my girlfriend, we were out there. My parents, they have their home, and here was a really cool trip. So we went to Italy. My little sister, my mom, my stepfather, myself, my girlfriend. Right. So we go to Italy. We're there for a week. Right. And we're like just hanging out with my parents, and then me and my girlfriend, how did this go? Okay, yeah. So we were with my parents for a week. Then 2 days before I go to fly to Spain and meet with my mom in Rome and fly to Spain and do a cruise, which was a lot of fun. My girlfriend and I do 2 days in Rome, just her and I, and we rent a scooter and we hit all the landmarks. We did the Spanish Steps, the Pantheon, everything, you name it, we did it. St. Peter's Square, the chapel, everything. It was just absolutely insane. Italy, Rome was wild. And then after that little trip, my girlfriend went on to Prague, and my mom and I started a cruise. This was a blast. Ready for this? We did started in Barcelona, then hit Nice, then hit Monaco, Monte Carlo, then hit Marseille or something like that, and
Yeah.
then we hit very north. So we went to Florence,
Uh-huh.
then Rome, then Naples, and then the cruise ship was to take us all the way back to Spain. But since my parents had a house there, we got off the cruise ship in Naples. So that was really convenient, have to
I mean,
what a
excuse
trip.
me.
What a
Like the
trip.
trip of a
It was
lifetime.
fantastic. Yeah. Monaco, Monte Carlo was
So
the
good.
most insane place I've ever seen in my entire life.
We went there. We did an Amalfi Coast trip. So
Oh gosh,
hit that.
Amalfi Coast
Yeah.
is insane.
Yeah.
I think that's like a honeymoon place.
Oh, yes.
So
Yeah.
when I get married, that's probably like 10 days Amalfi Coast, and then maybe even go south and then go to the island of Capri and go
Oh,
hang
I've
out.
been to Capri.
Yeah,
Yeah.
I love it. The Blue Grotto there is insane.
Yep.
I feel like that's another honeymoon spot. You go there
Sure.
seven
You know what
days
you
or something.
should do is just get married in Italy, and then we can be such good friends then that I can come and
Oh
then I
yeah,
can go back to all these places. Like actually propose tomorrow. So let's get this ball rolling.
yeah. My girlfriend's about ready.
Yeah, oh, sure.
She's
All
pushing.
right. Well, I'm as much as I would love to
Yeah, yeah,
talk to you
yeah.
about Italy forever, I think we'll wrap this up now.
Yep.
Thank you, and we'll see you back on the podcast soon.
We'll see you soon.
All right. As always, thank you to our producer, Joel Edwards, and Chesley Lowe for our banjo music. We'll see you next time.